Yeah, I think London will fare worse than the regions. The period of uncertainty is less of an impact in the regional market, which is broader based. And the regional market supply-demand imbalance is still in our favour, and that will provide good opportunities for Regional REIT in the short to medium term. Regional REIT came to market with a very simple, transparent offer, and that was to provide one of the highest dividends in the sector from core assets, providing good quality income off a diversified base, and that will continue in the short to medium term. In a word, yes, we set out at IPO with targets. We've exceeded those targets in all cases. We've paid a dividend of 7.65p in the financial year 2016, which as we sit here just now is about 7.4%. We have increased assets in terms of the gross assets by 30%, and actually including the Conygar deal, which we'll come on to later, 62%. So I think, and NAV has grown from 100p to 106.9 pence. And of course the dividend was fully covered. Yes, I mean, we completed this deal very recently, of course. The background was that we tracked this portfolio for some time. It fits very well with the core Regional REIT portfolio. Geographic spread is good with very little overlap from the existing portfolio. The 111 tenants, or thereby that the Conygar portfolio consists of, does not overlap with the existing Regional REIT in any significant way, and therefore gives us a much broader income base. The management has expertise across all sectors that the Conygar portfolio comprises, and therefore there are obvious benefits to the existing company. We agreed the deal based on September 2016 valuation figures, which we think will be beneficial in the short to medium term. The portfolio comes as 17% void, and of that void, the vast majority has already been refurbished, and we expect to see some early letting wins. And overall, the diversity that the portfolio provides, combined with the Regional REIT portfolio, puts us in a much better place going forward. Of course, gearing has gone up as a consequence of this purchase to circa 49%, but there is a programme and a plan in place to reduce this gearing over the short term, and we expect to be in the mid-40s towards the lower end of the 40s by the year end. We have been very active over the course of 2016, both in terms of acquisitions and disposals. 5 acquisitions, including 2 large portfolios, 29 individual sales. The sales were sold on a base of 6.8% yield, acquisitions at 8.6% yield, so the arbitrage is obvious. We've recycled money to good effect. In general management terms, we've been very active. 116 new lettings over the course of a year, just under 500,000 square feet, which when fully income producing will produce circa £5 million a year of income. We've undertaken 87 lease renewals on a success rate of 67%, but actually income has continued at 76% of that space as a result of immediately reletting space that had become available. We have undertaken or undertaking substantial refurbishment projects, 9.1 million net spend over the course of 2016, much of which will be recovered through service charge, but the plan for the company as a whole is to have individual business plans for assets and see those business plans through, at the end of which we decide whether to hold for longer term income growth or dispose and recycle capital. The general UK commercial property market is exactly that, a general market. I concentrate on the regional markets and Regional REIT's business, which clearly is impacted by the regional markets. The supply-demand imbalance continues. We're seeing a very active start to 2017 in lettings, with space letting up at a quicker rate than we've seen before. Our own portfolio void is likely to decrease over the course of a year. We're just under 84% occupied just now. We would expect to be closer to 90% by the end of this year. And the way things are going, that looks a very achievable target. And generally, the outlook for us is rosy. We're seeing good demand, a lack of supply with little or no new build still in the regional markets, and that is set fair for Regional REIT.